Good day, Money Masters. Welcome to this next video in the lineup. Today we are talking about unit trusts, also called mutual funds. Unit trusts, mutual funds, two different names, exactly the same thing. If you've always wanted to know what a unit trust is, this is the video for you. Let's get into it today. Let's rock and roll. Lovely. Before I dive into unit trust today, we are busy with a mini series that has brought us to this unit trust video. I am going to use some terminology that I discussed in the previous videos. I would highly recommend that you check those videos out. What is a stock? What is a stock exchange? What is a stock market index? And what is an ETF, exchange traded fund? But today, let's get into unit trusts or mutual funds. The first thing you need to know is that it is a separate legal structure. Where have you heard that before? When I discussed what is a stock, because the separate legal structure for a stock is a company that is made up of building blocks called shares. A unit trust is slightly different. That's why I'm bringing in today the family member of the previous movie star that I had on my show. Today it is the turn of Carl. Previously we had Kevin on the show. I'm using Carl because a unit trust is a separate legal structure that operates slightly differently from a company. Basically, again, a unit trust is made up of building blocks called units. That's why I like the name unit trusts rather than mutual funds, because it explains it. You can own units in the unit trust. The second thing you need to know about the unit trust is it is a pooling vehicle. A pooling vehicle. What is a pooling vehicle? Does it create swimming pools? No. A pooling vehicle means that we can take our own savings and investments, pool it with lots of other investor savings and investment into the structure called a unit trust, and that creates one big pot of money that can be managed by the investment manager who is appointed to manage that unit trust. And why can it be beneficial for us? Why would we want to pool our savings together with other investors into this bigger pot of money so that that can be managed on our behalf? And I'm not going to spend too much time on this because we've covered a lot of this in previous videos. But if you wanted to buy the top 10 stocks in the S&P 500, 100 of each of those would cost you around about $190,000. Closer to home, if you bought 100 of the top 10 shares in South Africa, that would cost you around 777,000 rand. If we have less money but still want stock exposure, we could go for ETFs. 100 of the SPY that tracks the S&P 500 shares, $40,000. 100 of the Satrix 40, 7,400 rand. And then you can say, I still perhaps don't have this type of savings available. Then what we could do is we could start using a unit trust. Okay, so bringing back Carl into the picture. If we've now bought units and otherwise we've put some of our savings in here and it's a big pot of money in there, that pot could be quite large with all the other investors that have pooled their money into this unit trust. And as an example, the investment manager could then easily with that bigger pot of money, buy those top 10 stocks or those ETFs, and you then own a piece of that through owning a unit or more than one units in the unit trust. And that is what makes it so beneficial to have this available for us as investors to use. You could, with a lot less money, start your savings and investment process. The other thing that you need to know about unit trusts is they do not trade on a stock exchange. These unit trusts trade, or you buy and sell the units through an investment platform that is often separate from your stockbroking account, which you would use to buy and sell stocks and ETFs. And I will explain that investment platform in another video. But that is how you buy unit trust, not through the stock exchange, but through another investment platform. The other thing you need to know about the unit trust, I already actually mentioned this. You buy one thing, you buy the units, but you get exposure to lots of other stuff. So what did I say? I said we pool our assets together in a unit trust, and then there is an appointed investment manager that uses this pot, and then you get exposure to all the assets that that unit trust manager, that investment manager, buys with this pot of money. That could be stocks or shares, ETFs, and lots of other assets depending on the type of unit trust you buy. Now here we get to a very important bit on unit trusts. There are more unit trusts available for investment than there are stocks listed in the world. In South Africa, the All Share Index contains around about 140 stocks. We have over 1,000 unit trusts to select from. And it's similar all over the world. There are lots of unit trusts. Why? Because there's lots of investors, savers and investors that do not have bigger pots of money that can go out and buy direct stocks or direct ETFs perhaps, but we can, if we get our savings mindset correct and we follow my Think Formula 2, which is you get your income and then the first thing you do is you save a bit of that. Okay, the first thing you do is you start saving, and that amount of money can more easily be invested in a unit trust that accepts less money than what you would need to perhaps go and buy an ETF or direct stocks. And as an example, in South Africa, a good number to keep in mind is that the investment platforms that you will use to buy your unit trust through, usually around 500 Rand a month. If you're going to start investing monthly, which I highly recommend, 500 Rand a month you would need to start taking that savings and investing it in a unit trust of your choice. So let me conclude by running through the biggest benefits of unit trusts. So I said it's a legal structure, therefore it is very highly regulated in South Africa, regulated by the CISCA, Collective Investment Schemes Control Act. So it provides a lot of investor safeguards. It doesn't protect against greed and fear. You must still have your investment and your savings mindset correct. Be in control of your emotions, because these things go up and down depending on the price of what the unit trust manager invests in. But it is very well regulated. It also provides diversified exposure to what? That depends on the unit trust you invest in. If you only invest in a unit trust where the manager, the mandate of that unit trust is to invest only in shares, it will be diversified exposure to many different shares. But you could also get a diversified, or what we call a balanced fund as an example. There could be more than one asset class in there, diversified exposure. There could be some stocks in there. There could be some what we call bonds or gilts in there, some listed property, whatever the asset class is that the investment manager decides to invest in. So it's diversified exposure. It is accessible. Once you've gone through the process of opening your account with the investment platform, you've put your money in there, you have flexibility and accessibility to a range of unit trusts. And this is the best vehicle, in my opinion, to start your process. You can invest smaller amounts on a regular basis. Why? Because we can take our smaller amounts of money and pool them together. This does not mean that if you have larger chunks of cash or savings available, that you should now go and buy direct stocks or ETFs. It doesn't mean that at all. This is a vehicle that's available for the smaller investor and the larger investor. These unit trusts, they allow you to invest smaller monthly amounts or bigger, what we call lump sums. It's available to all investors, which is a big benefit. Lastly, I just want to mention risk and take you back to my risk expected return profile. As I said, you can get diversified exposure, but it will depend on the unit trust you buy. And in each of these blocks, there will be several unit trusts that only invests in this block, only invest here or there or there. There's lots of unit trusts available, and it will still depend on your own personal risk profile. That will guide you to what type of unit trust you should invest in, and we'll get to that at a later stage. If you have stuck with me through to the end of this video, I appreciate you. You are a Money Master legend. And remember, wherever you see this icon, you can subscribe to the channel. You can follow me on Twitter at MoneyMasterSJ, and you can like the video if it helped you. The next video, I'm going to discuss those investment platforms I mentioned. That is the platform or vehicle that you will open an account with if you want to start saving and investing in unit trusts. Thank you for sticking with me. Lovely to see you. I'll see you in the next video. Cheers.